Good morning, everyone. We will start the morning call. Uh, uh, every year, typically in December, we see a strong, month for global equities with the Santa rally coming in the week after Christmas. However, this time that is not the case. The negative economic data, concerns around COVID reemergence from China, ongoing geopolitical tensions, all of this has led to the Fed policy action, which is not good for the economy. So accordingly, Wall Street's main indices ended weaker yesterday, with Nasdaq hitting calendar year's closing low. Previous low was made on October 14. So yesterday it broke that low. S&P 500 is now down 20% year to date, on track with the biggest annual loss since the financial crisis of 2008. And the rout has been more severe in the tech-heavy Nasdaq Composite, which closed at the lowest level since July 2020. So almost 2 years of gains have been eroded. 2.5 years of gains have been washed out. Uh, now fresh concerns of the spread of COVID-19 around China has unwound the Asian markets as well, where most of the markets are down between 0.5% to 1%. Even SGX Nifty is down around 0.4%. I will now invite the technical team to take the call forward.
Yeah, thank you, Jehan. Good morning, everyone. So let's start first with the derivative front, then we'll go ahead with the technical charts. As per the derivative data, if we look at the overall structure, it is not quite different from the yesterday front, because the OI positions which got added up in yesterday trading session was quite a range bound type of situation. Because if we look at the put writer positions, it got added up sharply at 18,100 to 17,800 strike, while call writer positions got added up from 18,200 to 18,500 strike. So there's not much of a difference, and there's not much of a data being available right now to be clearer for the trend to catch in the market, because as I mentioned yesterday that 18,200 to 17,800 will act as an important resistance zone, important range for the market. For the breakout or breakdown of this level, then only the new trend will be visible in the market. But the momentum is quite cautious right now, because on the upper end we are seeing that continuously at 18,200 and 500 strike call right positions are getting added up. So currently we're witnessing that SGX is also likely to open 100 points below, as we are seeing that PCR yesterday closed at 1.12 level. PCR yesterday made a high of around 1.19 level, and in the closing basis, it again dragged down towards 1.12 level. As I said, that 1.15 is an important resistance zone, and PCR came below that level on the closing basis. So this is a sort of a negative pointer in the market. Currently, we expect some sort of a selling pressure in the market in today's trading session with the support of 18,000 level. Once if Nifty breaks 18,000 level, then only we might see the next round of selling towards 17,800 level. So the expiry is on the today's basis. So if you need to create any new short position, below 18,000 would be a new short position need to be created, and for new long position above 18,200, once if Nifty goes, then the new long positions need to be created. Till that point of time, we can create a strategy as we recommended in yesterday trading session. A long strangle strategy can be created of 18,200 call buying and 18,000 put or 100 option buying for today's expiry. We expect a momentum rally in first half, so we can make profit in the first half only. So that's it from the derivative front. I will request now technical team to take ahead.
Yeah, thank you, Amit. Good morning, all of you. See, yesterday we saw that market trading with range and facing the immediate resistance and upside. So we expect today's gap down open and remain negative side during the day. Upside immediate resistance place around 18,170, 18,240, and intraday immediate support place around 18,040, 18,020 at downside. If Nifty first half to break this level, then we expect further sell off towards 17,920, 17,900 at downside. Bank Nifty also facing immediate resistance and upside around 42,500, 42,600 in upside, 43,000 in upside, and support around 42,500 to below 42,500. Then we expect further sell off 42,300, 42,000 at downside. Nifty Finance also we saw yesterday that is facing the resistance, and last half an hour we saw that some pressure in Nifty Finance also. The first immediate support place 18,490, 18,990. 940, and below that 18,800, 880 at downside. Upside first immediate resistance place in 19,040. So overall all three index facing the immediate resistance in last session also, and today we expect expiry session also in first half in pressurize, and if break important support level all three index, then we expect further sell off to be continued. In stock specific, Apollo Hospital ITC looks weak side. TCS also trading below the important average level. Then we expect the it's again create a pressure in TCS also. So negative side, Apollo Hospital, Bajaj Finserv, Kotak Bank, and TCS and ITC negative side. Positive side, HDFC Limited and JSW still looks positive at current level. That's it for technical. Fundamental I can carry.
Yeah. Vandana Sphoorti will be transferring its stressed loan portfolio, including return of loans of 323 crores as on quarter two to an ARC for consideration of 95 crores. So this is positive. We have seen a lot of such deals of selling of bad loans to ARC in this month from MFI companies. Earlier we saw Bandhan also, and recently yesterday Suryoday also did the same thing. As a sector, we remain bullish on microfinance, and the only caveat being a severe fourth wave in case it comes. Otherwise, the sector is poised for good re-rating. Ashoka Buildcon has been awarded 3 projects worth 750 crores from Madhya Pradesh Purva Vidyut Vitran Company. This is positive. Today, one IPO will be listing K Fin Technologies. We had given avoid rating. The total issue size is 1500 crores, constituting entirely of OFS. KFin's business model is similar to that of CAMS, another listed company. Both are registrar and transfer agents. That is basically they take care of all the back office transactions right from the time an investor purchases a mutual fund unit, and all their transaction records are maintained by these two companies. They earn a revenue as percent of asset under management of their of all their clients, which are mutual funds. So growth here will be in line with growth in the mutual fund industry. So RTA players, basically the business model is better than that of their clients, that is mutual funds, as there are around 40 odd mutual funds competing against each other, while there are just 2 registrar and transfer agents, KFin and CAMS. Hence, the industry is a duopoly, and market share of both players is largely been constant in last few years. KFin's market share is around 30%, CAMS is around 70%. On growth front, in last 3 years, revenue has grown at 13% CAGR. With ROC of 33%, although this seems pretty healthy. Valuations on other hand are expensive at 41 times FY22 PE, which is at a premium to CAMS PE of 37. So we think stock is likely to list flattish, close to the issue price of 366 rupees. Thank you.
Good morning. The Board of Directors of Privi Specialty Chemicals Limited has approved investment in solar power project by acquiring equity stake through special purpose vehicle up to 26% of the equity capital. It has entered into a power purchase agreement dated 28 December 2022, and The acquisition is expected to be with a cash consideration of approximately 5 crore, and this is marginally positive for the company as it will lead to reduction in electricity cost of the company. Then Coromandel International Limited has incorporated a wholly owned subsidiary, that is Coromandel Technology Limited, on 27 December 2022. The company is yet to commence business, and it will be involved in designing, development and manufacture of unmanned aerial vehicles and UAV mapping services, robotic systems, aerospace systems, etc. It will subscribe to its 100% share capital, and this is positive for the company. Thank you.
Yeah, Harshal, you can take over.
Yes, thank you, Jehan. Good morning, everyone. Yesterday, we had witnessed some profit taking in commodities, and this might continue. All in all, there could be a consolidation phase, and if we take gold, one can sell around 54,900 and maintain a stop loss of 55,100. Though 54,500 seems to be a good support area, so one can also buy around 54,500, maintaining a small stop loss of 54,400. And silver also, when prices are taking support area at 68,500 to 68,400. So one can initiate a buy on these levels. However, the price could be capped at 69,500, and one can initiate a sell at 69,500, maintaining a stop loss of 70,100. Crude oil, we witnessed a drastic fall, and there could be some pullback. So one can initiate a buy around 64.70, which is a supportive zone, and maintain a stop loss of 6,400. On upside, however, 66.20, 66.50 seems to be a resistance area, and unless 67 breaches, there one should avoid fresh buying. So the breakout point is 6,700. So initially, one can initiate a buy at 64.70 and maintain a stop loss of 6,400. Natural gas, again, prices are trading weak, and continuously the support areas are breaching. So there could be a pullback till 400 to 404, which is a resistance zone, and the selling pressures could continue if breaches 377 again. And in metal front, and copper, one can sell around 727.28 and maintain a stop loss of 732. 718 seems to be a good support area, and one can buy around 718 for a pullback with a stop loss of 715. Zinc also, 267 seems to be a good support area, and there should be a pullback till 272, 273. So one can trade accordingly. Yeah, then that's it from me. I'll ask Riya to take over from here.
Thank you, sir. Good morning, everyone. So on the currency front, we have seen USD INR opening at around 82.96. It has given a flat open for the January contract, and it will continue to maintain the 82.80 as a very strong support, at least on the intraday basis. We could see the bounce back towards 83.10. So 83.10 to 82.80 is the range that you could see the USD INR trading in today's session. For the JPY INR, we have seen it bouncing off from the level of 61.90 towards 62.21. In today's session as well, it has given a positive open, but there is resistance that is restricting the upside momentum into the pair. So 62.35 will remain as a very strong resistance in the pair. If it moves beyond that, you could see it testing the levels of 62.50 on the higher side. For Euro INR, we have seen a gap down happening. This is because there is also a lack of volatility into the international pair, as well as the pair has been remained into a very narrow range. Also, the lack of data into the or a lack of any activity that could push the euro on the higher side. There is not many major event that has been aligned to push the euro on the higher side, but overall the outlook remains positive on the euro INR, because the data from the eurozone has been coming on the positive side. So if you see any major dip happening into the pair, you can go long into the pair rather going short. For the GBP INR, our view remains the same of going short from the higher highs into the pair, and it has been following the same trend for quite some time. You could see it today testing the levels of 99.48 on the downside, whereas 100.35 will remain as a strong support. So that's all on the currency front. Thank you.